For years, Credit Suisse had served as Switzerland's center of financial security, until 2022 when the global banking giant found itself in financial strains. With 16 billion Swiss francs worth of AT1 bonds, they were on the verge of bankruptcy. But luckily, an unexpected savior emerged in the form of Credit Suisse's rival, UBS. On March 19, the Swiss Financial Markets Supervisory Authority, FINMA, brokered a deal for 3 billion Swiss francs, $3.3 billion, to take over and rescue Credit Suisse from bankruptcy. The move to appoint UBS was seen as a necessary evil, as allowing Credit Suisse to enter bankruptcy would have had a disastrous impact on Switzerland's financial center, private banking industry and the entire Swiss economy. Had Credit Suisse gone under, the entire holding company with total assets of over 350 billion Swiss francs would have evaporated, potentially resulting in a domino effect of contagion around the world. Likewise, should bankruptcy have been FINMA's chosen route, Credit Suisse's AT1 bonds would have also been written down to zero and many other Swiss banks could have faced a run on deposits. To avoid this, FINMA, the Swiss central bank and UBS reached a deal that allowed Credit Suisse to write down 16 billion Swiss francs worth of AT1 bonds, while entitling equity shareholders to payouts at the stock's takeover value. The merger, announced on March 19, is seen by FINMA as necessary both to stabilize Credit Suisse and to prevent an overspill of the crisis into the international banking sector. While UBS had taken a risk in agreeing to the deal, FINMA reassured shareholders by saying UBS is a robustly capitalized and well-organized bank that will face growing regulatory requirements if the takeover is successful. Post-merger, UBS will now become much larger than it was before 2008, however, FINMA reassured that the banking giant will still face regulatory requirements in proportion to its size and with the proper risk controls in place. Now talk of a potential investigation has been sparked by the federal prosecutor, who is looking into a number of potential breaches of criminal law by government officials, regulators and executives at the two banks. But despite the required oversight and ongoing uncertainty while the deal is in progress, FINMA is confident that the rescue of Credit Suisse in union with UBS will not only secure Switzerland's economy and banking sector, but also its reputation in the context of the global banking arena. The fates of both banks now lie in the hands of shareholders, but with hope that this merger will secure a brighter future for Credit Suisse, Switzerland and the banking industry as a whole.